And in the U.S. stock index, futures were modestly higher on Thursday, suggesting a rebound from the previous session's sharp decline as ongoing currency crisis in Turkey showed signs of stabilizing and optimism grew that progress was being made on trade policy. Now, what are the markets doing now? Futures for the Dow Jones Industrial Average rose 0.63%, while that of the Nasdaq 100 added 0.51%. The larger gains in the Nasdaq was partially due to better than expected results from tech industry bellwether Cisco. Futures for the S&P 500 index was over 0.5% higher. An Asian share slipped on Thursday but pared some of the steeper losses seen earlier after China announced it was planning for a new round of trade talks with the United States. The Shanghai Composite closed lower by 0.63% after opening more than 1% down. Hong Kong's Hang Seng Index fell 1.09%, while other major markets in the region also retraced some of their earlier losses. The Nikkei 225 took a slight dip of 0.05%, while South Korea's Kospi finished the day lower by 0.8%. Elsewhere, the ASX 200 closed marginally lower at 6,382.3, with energy and materials taking the biggest dips following a fall in commodity prices. We're still at the markets, but this time at the commodity segment, where oil prices clawed back some of previous day's losses on Thursday after Beijing said it would send a delegation to Washington to try to resolve a trade dispute between the United States and China that has roiled global markets. Well, market sentiment, though, remains bearish amid the dispute and concerns of an economic slowdown in emerging markets. Brent crude oil futures were at $71.1 per barrel in early trade. Now, to talk more about the volatility in the crude oil markets, I have with me one of the research analysts at the financial derivatives company, Tobiloba Ogukulu. Welcome to the program.
Thank you for having me.
So we've seen Brent prices managing to recover from previous losses, but as of yesterday, the commodity was down about 4.93%. What's the reason and, of course, the impact of this?
Okay, yes, oil prices were down by about 5% yesterday, and that was as a result of the bearish sentiment. So at the emerging market, like you said earlier, so these are markets such as the China and also Russia and South Africa. So we've seen that this has lowered the optimism for global outlook, and if the optimism for global outlook is lowered, then we expect the demand for commodities to decline. And also we've seen that the dollar also increased. That has strengthened. The dollar strengthened, and we've seen that if the dollar strengthens, then investors would shift their investment from the commodities to the dollar. So we've seen that has happened, and prices have been declining. And also we've also seen that the U.S. stockpiles increased by about 6.8 million barrels per day. And if this happens, we see that the United States have the potential to produce more oil. And if that is in place, prices will still decline further. So these are the factors that has affected the price. And aside that, we know that if there's a decline in oil prices, then this will have an impact on Nigeria, because Nigeria is an oil-dependent country. So we know that if this is in place, then we have an effect on our oil export revenue. So we'll see that in the near term, we're not sure, but you know the oil market is always volatile. Now I think it's about $71 now. So we expect that in the near term, oil prices will still remain volatile due to the increase in supply of the commodities.
Now let's still talk about Nigeria now. The oil production have increased by 4.38% to about 1.67 million barrels per day in July. Tell us the reason behind this increase, and of course, do we expect to see this trend sustained?
Yes, oil production has declined, has increased rather, like you said, to about 1.67 million barrels per day. And this is as a result of the lifted force measure on several terminals, such as the Forcados terminal and the Nembe Creek terminal, which carries about 226,000 thousand barrel per day. And this has been as a result of the lifted measure on those terminals. So we've seen that oil production has increased, but this is still below the oil cap of 1.8 million barrel per day, and also below the benchmark of the CBN, 2.3 million barrels per day. But we expect Nigeria to still produce more. There's potential to produce more. So if Nigeria produces more, bearing to no disruptions, then we expect this trend to be sustained.
But just before I let you go, Tobiloba, let's talk about this Baker Hughes report that Nigeria's oil rig count was higher by 23% in July. What are the implications of this development on the Nigerian economy? I'm sure that many will be interested in that.
Yes, definitely. The oil rig count increased by about 23%, and the last time it was at this high was February 2018. So this was as a result of increased activity. This oil rig count, the increase in oil rig count, can be as a result of increased investment in the sector. So we've seen that this can be through oil exploration or through oil production. And as we've seen, oil production has increased, so it is more of oil, an increase in oil production. So we expect this trend to also be sustained, and we expect that an increase in oil production would offset the decline in oil prices, and we expect our reserves level to still be stable.
Well, thank you very much, Tobiloba Owupolu, research analyst with the Financial Derivatives Company. Well, let's move on to other stories now and list some of your shares on the Ugandan Stock Exchange or give up a renewal of your operational license. Now, that's the condition from the Ugandan government to the telecommunications giant MTN Group. The head of Uganda Communications Commission, Godfrey Mutabazi, insists that Ugandans should be able to own a stake in the firm, which has operated in the country for 20 years. MTN Uganda's current license expires in October. The firm has dominated the market in Uganda throughout its 2 decades in the East African country. It's the largest telecommunications firm by subscribers, followed by a unit of India's Bharti Airtel and other smaller players. Last week, the Nigerian Telecommunications Commission gave MTN Nigeria a May 29, 2019 deadline to list on the Nigerian Stock Exchange as part of the agreement of a 330 billion naira fine settlement. And in Kenya, casual dining and coffee chain Java House Africa has signed a deal to export its coffee and tea to a Chinese online retail company as part of its expansion plans. Java House, which was opened by an American as a single Nairobi coffee shop in 1999, has 57 stores in 3 East African countries, with the majority in Kenya. The company's chief executive, Paul Smith, explains that the new deal will see Java House export 10 to 15 tons a month of its 375-gram bags of Kenya AA Arabic coffee and gold label tea to China via Green Chain, a subsidiary company owned by CJ Smart Cargo International. The company already exports macadamia nuts from Kenya to China and is focused on exporting high-quality agricultural commodities from the region to Asia. Still ahead on Business Incorporated, a review of trading activities at the Nigerian Stock Exchange. Do stay with us.